morning. Welcome to Meet the Masters of Insurance webinar series. I'm Lawrence Geller, founder of ForAdvisorsOnly.com. This is the 35th of what we expect to be a great many webinars with Canadians who have dedicated their careers to learning the art and science of insurance sales and service. Webinars in this series are now scheduled through the end of this year. Over the years, I've observed that many successful insurance agents whom I've met have succeeded differently, even if they're in the same field, deal with similar clients, and even if they're related or in business together. That's what makes the sale and servicing of insurance one of the best careers that I can imagine. It's possible to become a success in our business with diligence, integrity, and experience. With this webinar series, we intend to prove that any type of person can succeed with time and hard, thoughtful work. Our goal is to create a video record for each of these masters of insurance so that some of their expertise and experience will be available to anyone who'd like to learn from them. Today, we have Morty Sacks with us. Morty has been in the business since 1960. He's held a variety of positions. He's one of the founding members of PPI, and he's one of the founding members of CALU. He's been very involved in philanthropy and in the business, and is a great master of insurance sales and service. He's also one of the early devotees of the broad concept questioning technique, and he's a total master of it. Barry Pascal, another master of the technique, will be interviewing Morty. Good morning, Barry.
Good morning, Lawrence. What a pleasure it is to be here. And before we begin and I introduce you to my dear friend, Morty Sacks, I just want to take a moment and thank you, Lawrence, on all of our behalf, for the investment that you've made of your time and your efforts and your wisdom in sharing knowledge all of these years and helping us learn more and more about this craft that we've devoted ourselves to. So thank you so much, Lawrence, for bringing us all together. Now it's my pleasure to introduce everybody to Morty Sacks. Now, I met Morty. Morty, you'll remember I met you in '83 when my father, Bill Bell, first introduced me to you because you were in a study group together.
Correct.
And when I met you in '83, you were already established as really a forward thinker in the industry. You were ahead of everybody in so many different areas, in the technical areas, in leverage, in planning, and in the broad concept. But I have to ask, how did you first get into the business?
Excuse me. Good question. It's a long answer, but I'll try and shorten it.
It's a great story. It's worth listening to.
I was in my graduating year at Sir George Williams, which is now Concordia, and I was registered for law school at McGill. And about 2 months prior to graduating, one afternoon, I just had nothing to do. And in those days, unlike today, there were many companies on campus recruiting graduating students because I think it's a reverse today. But I would say that for every graduating student, there were probably 3 or 4 companies that were interviewing. And so there was a posting of an insurance company, Aetna Life Insurance Company of Hartford, Connecticut, was looking for university graduates in a management training program. So, as I said, having nothing to do with my time, I figured just out of curiosity, I'll go and have a listen. I did, and the person that was interviewing me was a guy named John Smith Chapman, who I had known because he was in my class the year before. He graduated earlier and had joined this program. And Smitty was very well known in Canada, even in the US at that time, because he was US Open, Canadian Open, ranked number 3 in the world in squash at that point. He also was on Canada's Davis Cup team, and everybody knew who he was. So he basically was recruiting on behalf of them and said that if you qualify, and that would have to be through aptitude tests and IQ tests, we're looking for management trainees. There would be training school with housing in Hartford. You would receive a salary for 6 months. You're going to learn all about the insurance business. And they offered me, if it worked, $400 a month, which in 1960 was a lot of money. And here I am at the age of 21, engaged to be married, but the marriage was going to take place after graduating law school. And I said, it's not such a bad idea. Maybe I'll try it, because if it doesn't work, I'll come back next year and I'll start school again. And so I did. I ended up going to Hartford. I was the only Canadian. I was the youngest in a class of 55 guys. We learned everything you had to learn about Social Security in the US, marketing in the States, tax laws in the US, everything, of course, which was totally different than here in Canada. But the one thing that I did learn, which was invaluable to me, was prospecting, direct mail, and a sales track. So when I came back to Montreal, that was basically what I did. And it was an interesting sales track. And one of the things that I can offer as advice to people when you are cold calling, we had a technique where we basically sent out a pre-approach letter. The letter said that if you give our agent an appointment, you'll get a free leather-bound address book, and all we need is a half an hour of your time, and we're going to show you how to increase the effectiveness of current insurance. And from a historical point of view, you're talking about maybe a 2 to 3% reply ratio, of which 1 out of 10 would probably be a real prospect, and 1 out of 40 would probably be a sale. But if you did 100 phone calls a week, you never know, things could add up. And in fact, they did. And the one thing I discovered when I was calling people is I said, I'm calling with the letter I sent you. Did you receive it? Some of them said yes, and they're not interested. And a lot of them said, no, I didn't get it. So I then went, of course, I said, well, here's what it said, went into my sales pitch. And it really didn't matter whether I sent a letter or not, because I still got the same appointment I would have gotten with that same person. Either they were uninsurable, or they were shopping for insurance. I just happened to hit them at the right time, or there were other reasons, but I did get the appointments, and it worked over a period of time. So that's basically how I started in the business. When I came back to Montreal, my office was in the old Texaco building, which is on Mountain Street. You would know that very well, which is now, I think, the Vogue Hotel.
That's correct.
And I guess for the first year and a half, I was working as an assistant supervisor. Smith Chapman was my boss, and my job was twofold: number one, recruiting, and number two, selling. And both of which I did. And the original selling part obviously was not an easy thing to get into, because you have to develop a thick skin, and as you know, and I'm sure everybody does, get used to the word no. But if you keep going, good things happen. And so that was basically how I got started.
You mentioned your training, and I know that they gave you 2 tests when you started. One was an IQ test that anybody that knows you doesn't have to ask how you did. But talk about the aptitude test.
I flunked it because they were focused, those aptitude tests were focused on the fact that you had some kind of a social connection with peers, with people that would be good as prospects. And at 21 years old, when you're graduating university and basically all of your friends are still in school, you really don't have any prospects. So, I mean, that more than anything else was the reason why I flunked it. And the general agent who managed the office that I was working with said that, that's something that obviously they recognize, because it's not the first time it happened. And he said, I'm still willing to take a gamble and take a shot and hire you and see what happens. So basically, flunking the test really didn't matter at that point.
Well, it's an interesting point, though, because, by the way, I also failed the aptitude test.
There you go.
The important lesson is as it relates to what you said about the word no. In other words, you failed the aptitude test. You were coming from an academic background. You were about to go to law school. So you'd always done well in school, obviously, if you were going to law school. Here, all of a sudden, for the first time, you fail a test. And for you, it didn't seem to have any effect on you. You looked right past it.
Well, because I think, first of all, I really recognized the reason why I did, which made sense. And secondly, I had every confidence that I could do what I had to do. And this is my 64th year in the business. So it's basically, aside from part-time jobs that I had before I finished university, it's really the only thing I've ever done in my career. And I'm still doing it and I'm enjoying it.
So you started out, you were with the with the Chapman agency, you were working together, and you started to make sales. What types of sales did you get involved in early?
I even kept some of my records and I still have them. In those days, if you sold $10,000 whole life non-par policy with $150 annual premium to, let's say, a male age 40, and you made a commission of 75 or 80 bucks, that was a lot of money. That paid your rent for the month. So I had sales where the premiums are $100, 150, 200. I mean, a big one would have been 300 or 400. Most of them were through direct mail, or most of them were through cold calling. And it basically just seemed to be easier and easier because obviously everybody's very nervous when they first start out. You're on a sales track. You have to ask the person to buy, I think it was 14 times on this particular. You just don't take no for an answer. And a lot of people said yes, but most said no. But the ones that said yes encourage you to keep going. And as I said, I still have a box with the original records of the policies I sold back in 1960. And I was looking at them I happened to come across it a few weeks ago when I was cleaning out some stuff. And I said, wow, I couldn't believe it. Disability insurance, we were selling group disability, which was $2 a week. So it was payroll deduction where the employee was having $8 a month withdrawn from his bank account. Company was paying the other half, which was another $2 a week. It was a totally different world then.
Well, a different world and also a corporate agency world. So
Correct.
as you started to become successful in sales, how were you rewarded?
Well, there was, I think I was 27 and my partner or my boss at the time, Smitty, was 28, but we were pretty well working together. And the Aetna had bought Excelsior Life in Canada and decided because they only had two GAs, one in Toronto and Montreal, they were going to put everything under the umbrella of Excelsior Life. So suddenly we became Excelsior Life. Our location didn't change, but we had a whole new learning process in terms of product and marketing and sales in general, and of course management, because now they were looking to open up a couple of new branches, one in Toronto, one in Montreal. And both of us felt, we had enough experience behind us, even though we were only in the business a couple of years. Maybe there's a shot that we could get it. So we went to see the superintendent of agencies at that time and said, listen, we'd like to apply for the job of the branch manager. And he said, you're too young. And we said, well, how old do you want us to be? He said, probably 45 or more. So I said, well, if you add our ages up, we're 57. So he looked at us and he said, well, that's a good point. So they basically said, okay, they set up a new agency for us in Place Ville Marie, which was one of the newest towers in Montreal. Beautiful. We had a whole quadrant, and then we had a job to start recruiting. And I recruited a few of my friends on Smitty, but a lot of them were just by agencies, ads in newspapers, a lot of time in picking the right people. Most of them didn't succeed. Insurance companies in those days were offering financing for 3 months where you get a draw. And of course, after 3 months, you're cut off if you haven't done any business. But there are a few that did. And within I guess 2 to 3 years, we were basically the largest agency in the country. And we were doing so well that we played golf every day. You know, our agents were out and we were getting overrides. So it was a great job, great business.
You know, it's interesting because I think it taught me two lessons when we were talking about this the other day. The first is a theme, and you'll see, everybody here will see as we talk about your career and the different things that you've done through your career, you always had the ability to take something ordinary and just turn it on its side and look at it a little differently. So that's true about how you worked with product. That's true about how you worked with financing, but it's especially true in these early years where you faced obstacles. So when they said to you, you're too young, you didn't even blink an eye. Right? And this was, and it's hard for people to visualize this because this was in the agency system corporate world in the 60s and the 70s. I came in the 80s. It was the tail end of that world. This was real authority in our industry. And you didn't blink an eye. And you just said, let's look at this from a different perspective and let's create an opportunity.
Yeah. And we set a precedent because they did hire some younger managers from that point on as well. Because I don't think age has a lot to do with it. It's a question of, you know, who you are and what you do and how you think. And as the saying goes, thinking outside of the box, which is something that we all try to do. And it's worked for me.
Then to me, another very interesting thing happened because when I came into the industry, I met managers who had been in their own right, great advisors, great in sales, accomplished insurance advisors who became managers and suddenly found themselves golfing and suddenly found themselves earning overrides. And for them, that was all they ever wanted. Now you're in that position. Most people in that position would have continued down that road. How did it impact you? How did you react to that?
Well, I mean, as I said, we enjoyed it, but one day there was a phone call from a gentleman by the name of Don Pooley. I guess only the older agents would recognize that name, but Don Pooley was one of the best mentors in the life insurance industry. He was with Joe Dixon at Westmount Life, called us and asked us if he could take us to lunch. And knowing who he was, of course, there's no way anybody ever said no to Don. So we went. He questioned us for about an hour in terms of what we did, how we did it, what our ambitions were for the future. And both of us were said, you know, that obviously we're not happy staying where we are. We want to grow and expand. And we'd also like to, and I was doing some selling at that point, but like to continue doing that. So he basically said, well, maybe I could make an offer you can't refuse. And they offered us at that time to match the income that we were earning and guarantee it for 3 years, whether or not we earned it. After 3 years, we'd make a decision. And on the understanding that coming with Westmount Life at that time, which was a very unique life insurance company, focusing strictly on the high-end market, on estate planning and taxation, they would teach us everything we had to know about being successful in that market. So both of us basically jumped at the opportunity. We handed in our resignation. The insurance company wasn't very happy about it, but we did leave doors open because he said, listen, you never know what happens in the future. And went to Westmount Life, which I think was really the forerunner of PPI because some of the ideas and the concepts were carried forward for many years to come through Joe Dixon. And we did learn a lot.
So now you go from being a manager, giving up all of that stability, back to your roots, which is in advising clients.
Correct.
And you're learning about estate planning and you're learning about the broad approach. And I think, you know, when Lawrence first talked to me about having the Meet the Masters series, it was because he said, we've been so fortunate, you know, You were one of my earliest mentors when Bill introduced you to me in the 80s. And people should
remember.
realize, I remember visiting you at your office on Shepherd, and you were a giant in the industry at that point. And you would sit me down and you'd start talking to me about some of the things that you were doing, and you'd pull out a file and you'd say, wait, I just want to white out and you'd say, never mind, I'll just show it to you. And you were always teaching and always sharing. Even though you were at the top of your game and busier than anybody else, you always made time for others. So now we're here and we're meeting you, and you were one of the forerunners of the broad approach, the broad concept that Joe used to talk about.
Right, right.
Can you share a bit about how that was compared to what you had learned and how that applies today?
Oh, it still applies. I mean, the whole idea was, most life insurance agents, when they went in to see a new prospect, the only thing on their mind was closing a sale and a quick sale. And in most cases, they were really selling a product. They weren't giving any reason for the client to buy that product, other than the fact that you need it because you have a family and so on and so forth. And the broad approach was very different. The broad approach was to know who you were dealing with and what makes that person tick. And so the way we were taught worked as follows, and worked for me is I get an appointment with a new prospect, whether it was for direct mail or referral, and I always like to see them in their office because that tells you a lot about the person as opposed to having them come to your office. And one of my first meetings was with a gentleman that was in clothing manufacturing business in his mid-40s, very successful. Gave me a real hard time in terms of giving me the appointment. Finally agreed. If half an hour, that was it. And so I went in, we sat down, we shook hands, and first thing I looked at was he had a shelf in his office with pictures, obviously, of his family. And I said, "Is that a recent picture?" And he said, "Actually, it's about 3 years old." And I said, "So your kids must be what, 14, 15, 16? He says, "Yeah, 16 and 17. I said, "Oh, very nice." And I said, I couldn't help but notice, but when I came in here, it's a really very impressive place. How did you get into this business? So he went into a long diatribe about how he started out of his a basement. His father had lent him $1,000. He had 600 square feet. He started making dresses and sewing them himself, and gradually hired somebody else and expanded over a period of about 8 years to the point where he was one of the largest manufacturers in Montreal at this particular point. And I said, "Wow." I said, "That's amazing." I said, "You mind if I ask you if you could show me how everything works? Show me your plans." "Oh, sure, I'd love to." Very proudly took me around, introduced me to a few people, said, "This is how this works. These are the finishers," the entire thing. And of course, having grown up in Montreal, I was used to the needle trade because that's where most of the industry was. So I knew a lot of people in that business, and it was really a very interesting discussion. So now we're back in his office, and I had asked him a few other questions during that period, in terms of what his ambitions were, what he thought his kid's going to go to university, and so on. I didn't write anything down because that's one thing that intimidates people. You have to really, you want to write anything down, do it when you get out of the meeting. And basically knew what his age was, what his wife's age was, because he told me. And then I got up, I said, "Look, so I've been here an hour." He said, 30 minutes. He said, "No, that's fine." And I said, "It's been great meeting you, and enjoyed the tour and talking to you." And he said, "Wait a minute." He said, "Where are you going?" So I said, "Well, I'm leaving." He said, "But you didn't try and sell me anything." I said, "Well, I don't know what to try and sell you. I mean, I didn't really know anything about you. I don't know if you need anything." So I said, "If you don't mind, I'm going to go back to my office and I'm going to think about all the things we talked about. And if I come up with something I think might be appealing to you, I will call you." And he said, "Wow, you're the first person who came in here and not tried this and didn't try and sell me something." So that was the start of a very good relationship because a couple of weeks later I did call him. and ended up making a very nice sale, ended up making a friend, and grew as his business grew, his amounts of insurance grew. But that was the broad concept. And whether it was then or now, it works. I mean, I'm still using it today. I want to know everything about my prospect before I put my foot in my mouth and try and sell them the wrong thing, which is what a lot of agents do. A lot of agents will come in with a preconceived idea. I'm going to sell a product, which is 32 pages of quotes and numbers, and most people will look at that and their eyes roll back in their head, and they don't understand it. So they don't understand it. They're not going to want to do anything with it. So keep it simple, stupid. Try and do it briefly and on 1 or 2 pages to start with.
I just want to pause there and unpack a few of the lessons you just shared because they're very powerful. First of all, this idea that you just don't take notes in the first meeting and you're just listening. So you're relaxed and you're listening to the story. And I know you, and anyone that knows you knows you're the most curious person. You're always interested in a great story. And you've told me so many stories of people you've met at the back of planes or in the gondola when you were in Venice. Like, you're always interested in people's life stories. So this idea of taking the sales out of the meeting and having a conversation, it seems very natural to you. Is that something you feel is transferable to everybody?
Absolutely. Absolutely. I mean, I'm really not party to how new agents or brokers are trained today because I'm not involved, obviously, in that aspect. But I would think that that's the thing that they should concentrate more than anything else is how to gain the confidence of the person that you want to see. And that's the way to do it. You want to become their friend. I think, I have a lot of clients who have been clients of mine for many years who've become my friends as a result of that, and who've told me that, you know more about me than anybody, including my wife, you know. So, which is interesting, but it's true because,
Of course.
a lot of people don't want to tell their wives and whether they have problems or they don't have problems, or maybe they have a girlfriend somewhere. They don't want to know, but I know, and these are things that people will tell you once you gain their confidence.
It's interesting, one of the observations I made early on was, you've become the trusted advisor at that moment where they look around in their office, even though you're the only person there, and they look left and they look right, and then they look at you and say, well, I've never said this to anyone, and they
Exactly.
share these very deep, important, intimate secrets with you. Now, let's relate that to his reaction at the end of that first meeting when he said, well, just a minute. Aren't you going to try and sell me something? He must have felt enormous relief. He probably never met anybody like you in our industry.
Yeah, he said so. And that's the way everybody operated in those days. And that's why Westbound Life with the Joe Dickstein, Don Pooley, and a few other really good, I guess we call them non-productive associates, because one of the things that Westbound did is everybody that was in sales was an associate, and everybody that was in management was a non-productive associate who was there to help the associates. And so the term manager, supervisor was never used in that regard. And it was a totally different philosophy. And pretty well, one thing I do recall, and Bill will probably recall this, was that Time Magazine did a special, this is a Canadian issue of Time Magazine, special issue, and on the cover of Time were the pictures, little small ones, of all the agents with Westmount Life from coast to coast. There were 100 members of the $1 Million Roundtable, and there were 100 agents with Westmount Life. So they were getting phone calls from all over the United States. How did you do this? How did you accomplish this? Well, we all knew how you did it. They just stole all the best agents across the country. Everybody that was successful, they used Don Pooley or somebody else to go in and convince them to join Westmont, because Westmont didn't have like a training school to teach any of these, but they did have a way of educating people that were successful and making them a lot more successful.
But they
And
created this culture of mentoring,
yeah, yeah,
which I
exactly.
certainly benefited from.
Yeah, absolutely.
I think if there's a lesson that people could take away from this, it's the training. You know, the first time I went with Bill to a conference, Bill said to me, "Look, Barry, I know you're going to be there in the second row writing notes the whole lesson, but I just want you to realize that the action is in the corridors and at the pool. It's when you're sitting down with your friends
Right.
or your people you're just meeting for the first time and listening, and they will teach you amazing things about our industry." And so you were in that culture of sharing and
Yeah.
learning by osmosis, right?
Yeah, and there was another, you just reminded me of another funny story. This goes back also, I don't know how many years, but it was at top of the table meeting in Arizona. And I was sitting at the bar having a drink in between, uh, I guess, meetings. And this guy was sitting beside me. And we started to talk. And I could tell by his accent he was a Texan, you know, and he asked me where I was from. And I told him, so he gave me his card. I gave him my card. And I looked at his card and it had his name and it said LIA. And I said, what is LIA? He says, life insurance agent. I said, oh, interesting. He says, nobody ever asked me that question, but if they did, I said, I don't have a CLU and I don't have, and I never went to university. So I'm an LIA, but I do very well. Obviously, he went to the top of the table, they did very well. And so again, you can have all the training and background and education. It doesn't make you a great salesperson. I've learned that too, even as a branch manager, because we hired a lot of university graduates who technically were great, but couldn't sell their way of a paper bag. And that happens. It's a personality thing too.
Now, talk a bit about the product side, because when you were at Westmount Life, we've experienced it. Some of us experienced it. When I came into the business in 83, there had just been a major change in the Tax Act around life insurance. Then
Right.
in 95, we went through the stop loss rules. Then 2016, we just went through the MTAR rules. So you were working with Westmount Life, dealing with business owners and entrepreneurs and their advisors, right?
Right.
In a very specified area. Can you talk about that?
Yeah, we had really our market was small business. And at that time, the tax rules were a lot more generous than they are today. There were two products that we really specialized in. One was called deferred profit sharing plan, and the other was top hat pension plan. And basically, what a deferred profit sharing plan was is that if a business owner had a small company, let's say with 10 or 12 people, he had a choice of offering them some incentive to stay with him for a while or not, depending on how that employee performed. So he was allowed to put $1,500 a year into a deferred profit sharing plan, which was, you had to legally set that up. And you name all the people in the plan. He can name all his employees. And on behalf of each employee, they could contribute $1,500 a year to this program. So basically, if you had 10 employees, you have $150,000 going in. That money was to benefit the employees, but only under certain rules that had become vested in that employee. In other words, you could set the rules and say you have to have brown hair and blue eyes, and you have age 65 still with the company, you're entitled.
So
Of
the
course, that
company
never happened.
owner, the entrepreneur could end up recapturing all this money, even though it was put in as
Exactly,
a group.
exactly. So the
So
money
it's an
was
amazing
used,
loophole you're working
yeah,
with.
the money was used basically to buy life insurance on the lives of the shareholder or shareholders. Cash values accumulated in the contract, which were in the plan. And it was great for a number of years because nobody really cared about the cost of, is my rate better than your rate or his rate? They were getting a great benefit and they knew it. And most insurance people really had no idea how to sell a deferred profit sharing plan. So that was one of the things that obviously we learned. The other was a top hat pension plan, which again, you could artificially create a pension using a formula for past service, where you could funnel in, if somebody was with the company 20 years, 20, 30, $40,000, which was all deductible to the corporation, which was sitting in a plan for that person's benefit. And again, there were rules and regulations in terms of how that money was going to be used in the future. And again, in those days, might sound funny today, but we used a contract called pension with insurance, which in fact was a 20-year endowment on a non-participating policy, which probably the worst investment you could make in terms of the way insurance policies have evolved over the years.
Except for the tax wrapper that you were putting around it that made it work so well.
Exactly. So we had three products. We had 1-year renewable term, we had whole life non-par, and we had endowment with 20-year endowment. All three of the rates were the worst in the industry because Westmount was paying everybody the highest commissions in the industry. So that was built into the rate. But when somebody said, well, okay, that sounds great, how much is it going to cost me? Well, if you were 40 years old, or, just estimate per stage, probably 1.5% a year. 1.5% of what? Of the amount of insurance. So if you're buying 100,000, $1,500 a year, roughly, And if you're 50, 2% a year, and everybody understood that. It was very simple. So when you came in with the final contract and the rate was, whatever, $1,700 a year instead of the 15, nobody ever objected. And so that we were doing great until
this is what I wanted to come to.
Somebody in the finance department of the CRA said, wait a minute here. There's something going on here which doesn't make sense.
It's an unintended outcome.
Yeah. And the long and the short is they blocked the 79C and top up pension plan. So now here we are, a company, all these great salesmen with no product to sell because we couldn't compete in terms of product. If you went in and said, well, I'm going to do some estate planning, that's great, but I could call so-and-so from London Life or Empire Life, probably knows as much about you do, and their rates are a lot better. Why should I deal with you? So we all faced that, and we said, well, it's time to move on. And that's when the gates opened, and most of the agents ended up going independent or joined other insurance companies.
Because the era was more single company representation.
Yeah.
Then, right?
Well, in Quebec in particular, we were all brought up on a different philosophy because in Quebec, even though technically they had that rule, it was ignored. So if you were licensed with company A and you wanted to sell to company B or C, nobody really even asked you any questions. You were an independent broker. In Ontario and the rest of the country, it was single company representation, which was really enforced, and you had to have a letter from your licensing company to allow the other company to have you sell their product, and you needed a good reason saying that my company doesn't sell this or whatever. So it's a different philosophy, different market, but you could adapt to anything when you have to, and most people did.
So I want to just take a moment on this because many of us have lived through these waves, these big, significant changes, either in product, in pricing, or in tax rules.
Right.
But in your case, this wasn't just one area that you were working with. This was the entire focus of your practice. And
Exactly.
You got how much notice that the rules were going to change?
About 2 weeks.
So you got 2 weeks notice
Right.
that the rules were going to change.
Yeah.
And that translated into an opportunity in your mind on where to go next. So talk about that process, because all of us and everybody on this call, we've all faced these. Not everybody handles them in the same way. So this is your ability to see through walls. I want you to talk about what you did next.
Well, there was one agent with Westmount Life who was considerably older than me, was about 20, and he actually was mentoring me in the broad concept, and we did a lot of work together, split cases, and one of the things I was really good at was prospecting, and one of the things he was really good at was closing. So we worked together, and both of us were now in the same position. Well, we decided to go with another insurance company. We ended up going as brokers with a British insurance company at that time, which was Commercial Union, who had some very interesting products because it was based on the British system and the British dividends. And compared to anything in the Canadian marketplace, the returns on investment, cash values was astronomical. So we went with Commercial Union and we did sell some really nice par contracts because everything was par in those days. But one day we were sitting with three partners in company we were talking about buy-sell agreements. And one of them asked a very interesting question. He said, we were talking about $100,000 on each of three of them. One of them said, well, we're not all going to die at the same time unless we're flying in the same airplane or in the same car. Normally speaking, one of us is going to go and then going to leave the other two. Why do we need $300,000 of insurance? So I said, that's a really good point. So we said, let's think about this. And we went back and we said, there was a policy in existence, which still is, which is a joint life last to die, which, you use estate planning situations, but there never was a joint life first to die. So we sat down with the chief actuary of Commercial Union over dinner one night and talked about this and said, can we design a contract where you can insure a group of people, 3, 4, even 5, on the basis that when the first person dies, you pay the benefit. And then we have to provide evidence of insurability, guaranteed insurability, and many other. And we also have to look at what happens if the partnership breaks up. Each want to go their own way. What happens with their insurance? It took us, I guess, about 6 months until we did the work, and then we had to get legal opinions. We ended up going to Stikeman Elliott, and one of the people I worked with was one of our former prime ministers, John Turner, who was absolutely brilliant in helping us create this whole contract. And of course, once Stikeman Elliott's name was on it, I had a lot of credibility in the industry. So we came out with a product called Contingent Life, which could do exactly that. You could insure up to 5 lives. You had an actuarial age equivalent, which was basically a combination of the ages of those individuals. Instead of a discount from the older age on joint last, it was an add-on to the oldest age. So if you had, for instance, 5 40-year-olds, the rate would probably be equivalent to a 66-year-old. And I'm just pulling that out of there. But so that would be the rate they would pay as a group. And we could issue individual contracts, not just a group certificate, so that everybody has a policy and everybody can deal with those policies independently while they were alive. It was a brand new concept. Everybody else said they're nuts. There's no way we could sell it. But we went out and actually, it made sense to the people that we were talking to. We said, as an example, why buy 2 when 1 will do? Or why buy 4 when 1 will do? And that opened up an awful lot of doors to the point where we did a lot of business with Commercial Union over the first couple of years, and then Commercial Union decided to pull out of Canada all of their British products and go with Canadian products, which were okay, but nothing as good as the ones that we had marketed. And we one day got a call from our old company. Remember I said we never burnt our bridges with Excelsior. If we would come back and help them develop that product, which we did. And our job was not only to help them develop the product, but to explain it to all of the agents and brokers across the country, which we did for about 1.5 years. And all of this happened in, trying to remember now, I think it was 1971 and 72. And then we received an interest from several insurance companies in the US, prompted by a friend of ours who was an accountant who had sent out some mailing asking them if they would be interested in this particular concept. Sent out about 100, got about 40 answers. And so he narrowed it down to a couple of insurance companies. We ended up dealing with the one called First Colony Life out of Lynchburg, Virginia. and which was strictly a brokerage business and also specialized in substandard insurance in those days, which a lot of companies do today. And this was a new way for them to get into the marketplace. So we worked with them, and they had a product, they still do, for up to 10 lives on a joint first or die. And I still have the sales books and all the presentations and the ways to sell it. And our job was to educate their brokers across the United States. So we spent 2 years traveling to 48 of the 50 states and holding seminars in hotels, flying in and out. We also went into every state, you had to have the commissioner of insurance give you permission to sell that particular product in the state. Some of them did in California, and a few others really didn't care what you did. But most of the states were very strict, and especially the state of Florida. And so we also went with the president of the insurance company to the commissioner's office to do a presentation and explain how this worked, and then we got the approval. So there was a lot of work involved. We saw a lot of airports, a lot of hotels. We didn't see much of all the cities, but we made our mark because the deal we made with them was they gave us a consulting fee, which was a nice one to start with, and then we had an override for 20 years of all the business sold in that product over that 20-year period, and
yeah,
it was a good deal.
Well, you only know how to make a good deal, but I have to just pause here because there's a few really valuable lessons. Even though you were working in a completely different environment with a completely different set of rules and a completely different set of companies, right? I remember at the first CALU, David Downey said, I work today with companies and products that didn't exist 20 years ago. Right. And I worked 20 years ago with companies and products that don't exist today. The only constant is me, right? And you're the constant. But first of all, when I came into the business, Bill Bell, my dad, said to me, if you listen carefully to your clients, they will teach you everything you need to know about our business. Right. And so you started by listening carefully to your clients who told you what shareholders insurance should look like. Right. The difference was you didn't say, well, we only do size 11. You said, oh, there might be something there. And you did the classic Morty, take something ordinary, turn it on its side, and make something new. And so you went out and did this, and you weren't afraid to ask. Yeah. And then the other lesson is your fearlessness. You were absolutely fearless. So you weren't afraid to deal with new companies, with new jurisdictions, with with a gentleman that would become a prime minister. And then I'm going to ask you, because I'm proud of it, to share that that's not the only prime minister you ever had dealings with. No. And you weren't afraid to ask the question because you were confident in the message that you were delivering, right? So now talk about taking this. And then when I met you, you had taken this ability to do a seminar and to share ideas and take complex and make it simple. And when I met you, you took me along as you visited accounting firms and talked about estate planning and product and opportunity to develop for their clients. This became a way of developing business for you, but for you, it was just Morty sharing and teaching, right?
Yeah, I do remember that. Well, I guess the one big example was with, excuse me for a second.
Please. And I want you to talk about, in the last few minutes, your experience with leverage early on and who you worked with and how you developed this.
Okay, so, first things first. So one of the law firms that I was doing a seminar, I had one of my associates with me, was a firm called Heenan Blakey in Montreal, who's one of the national law firms, very well regarded. And that was the firm that really most of our prime ministers in those days came from. So I was asked to do a seminar on how tax avoidance, leveraging being a part of it, because we were sort of in the early stages of leveraging. And but I walked into the boardroom and Pierre Lalonde, Jean Chrétien, and Pierre Trudeau were all sitting there. And along with a whole bunch of other, I think it was 15 people in there. And I said to the person that brought me in, I said, I don't think I'm very comfortable in doing this. I said, why not? I said, well, look who I'm talking about, tax avoidance. He said, they're on our side now. They're not in government anymore. I said, oh, good point. Anyway, so we did it. And especially Gretchen had asked a really good question, which I was able to answer. And we were able to convince them that what we were doing was fine. It was
And
within
not
the law.
avoidance, but planning, right?
Yeah, all went based on planning. So that went forward.
Take your time, Morty. Take your time. We have a few minutes. But I wanted people to understand how you were able to take this very complex idea and share it with a group of people who were very strong technically in their area, but have them take pause and listen to you and not bring their baggage into the conversation and open up a whole new set of opportunities.
Well, basically that's what happened. I mean, these people were there to learn, because just like we get CE credits in terms of education credits, and we have to go to seminars or webinars or whatever, even then, whether you're a lawyer or an accountant or any other profession, they had to get so many credits too in terms of credits for study hours over the course of the year. And they did get credits because they were exposing themselves to something different and something new. So that was why a lot of them readily agreed to have us do a seminar for them. When I say yes, I usually came with one or two of my associates. And it opened up a lot of doors. And we did the same thing with accounting firms.
Yeah, and I was fortunate enough to get to witness that and learn from that. So let me ask you now in these last couple of minutes before we turn it back to Lawrence for questions. With all your experience, the fearlessness, the creativity, the sharing that you built your career on in this incredible practice, where you're still active today, what advice would you give to someone coming into the industry today, given how it's changed?
Well, totally different than when we started. I think what most people try to do is to become a jack of all trades, master of none. And in other words, instead of a GP, a specialist. And I was told by someone I respected way back in the early part of my career that if you want to be successful in this business, try and specialize in an area. It doesn't matter what area. You decide what you're interested in, whether it's disability insurance, health insurance, estate planning, taxation, whatever, and learn more about that particular subject than anybody else. And once the word gets out after you've done a couple of transactions, you will be regarded as a specialist, and other people will want you to work with them. And exactly that's what happened with me when I decided to really specialize in estate planning and taxation. So even though that there were a lot of other business around, I could have, done disability insurance, individual term insurance. I don't think I actually sold a term of policy in the last 35 years. But I knew a person in rural Ontario who had his own helicopter, who was a broker with Transamerica, which no longer exists, who sent out 1,000 pre-approach letters a month. And it was offering the cheapest term insurance rate in the market. This guy became a multi-millionaire just through doing this. And when he ran into a situation that wasn't a term prospect, he'd call me and I'd go and work with him, and we'd do a joint case based on, what we were doing at that particular point in time, whether it was leveraging, and we did some pretty big cases together. And that's the one thing that has happened to me over my career is I did joint work with a lot of brokers in Ottawa, Toronto, Montreal, rural Ontario, Northern Ontario, and BC, where I had to get special license because it wasn't licensed there, but Quebec and Ontario, I've always been licensed. And, you know, they would call me, they had a prospect, but they really didn't know how to close it. So I developed relationships with a lot of people too that I did a lot of joint business with over the course of time.
Wow, Morty, before we turn it back to Lawrence, what a story. And, you know, to me, your lesson of creativity, of curiosity, of openness to new ideas, and the listening, the great listening to clients, and then turning that into new products, new concepts, always to satisfy a need. I don't think we could have asked for a better example of what Meet the Masters is all about. And for me, and Morty, I tell you, I think every time I see you, but I want to tell you again how grateful I am for those early days when you sat with me, when you had no time. You sat with me and with so many others, but the benefit that I got from learning from you and how fortunate I am, how grateful I am that we've had this friendship for over 40 years now.
Well, you know what? I'm just as glad that we have had that friendship because what you've accomplished has been phenomenal in Montreal as well, and I have to compliment you on that. I think you've really grown into one of the top producers in the entire country, and you're well regarded. So I was glad to be part of that.
Thank you so much. Thank you so much. And Lawrence, I'm going to call on you to see if we have any questions.
I don't see any yet. Marty, we were really lucky. When we started in the business, there were branches. We could walk down the hall and speak with somebody who had 40 years of experience. You met Joe and Don, George Lingvari, and all of the greats from Montreal. So you had mentors available to you. If somebody today were looking for a mentor, how would you recommend they do it?
Good point. Let me think about that. Well, one would be Barry for sure. And there are a few members of CALU that are very successful, a lot of younger members. And I'm sure that a number of them would be open to that. So, I mean, first of all, if I were one of these people that were looking for a mentor, I'd make sure that I become part of CALU because I think that's a key in terms of education, in terms of accessibility to a lot of things that you don't have under ordinary conditions. And there are a lot of people at CALU that you meet at these conferences that you basically form relationships with. And, you know, everybody is in a different city, but they're usually people from your surroundings somewhere that you can sit down with and on a regular basis, or even, you know, put together a study group, which is one of the things we used to do. I don't know if that happens anymore, but we used to have study groups where people came in from across Canada and spent 3 or 4 days together, 10 or 12, and just had an exchange of ideas for 3 or 4 days, and everybody benefited from it.
And then there's the CALU program, right? CALU has a mentorship program now
exactly.
where they have people signed up ready to mentor.
Yeah, absolutely.
But mentors don't go looking for proteges, for people to mentor.
No, people have to go looking for mentors.
Lawrence, what's that expression about students? When the student is ready, the teacher appears?
No, sometimes. Sometimes the student has to go looking to find a teacher, though. What would you do other than CALU, Morty, to look for a mentor?
Other than CALU? Well, I mean, I'm just going with, you know, my own experience in the industry, but if I were looking for a mentor, whatever city I'm in, I probably know the names or have met some of the bigger producers in that city. And maybe I would just, like I was trying to sell a policy to a prospect, I would call. And I'm sure a lot of these people are approachable and say, listen, you know, I admire what you're doing, and I'd love to meet with you. And I would love to take an hour or two of your time just so that I can pick your brain a bit, because I'm hoping that one day I might be in the same position that you're in. I think a lot of people would be receptive to that.
let's go back, if we can, to your pre-approach letter way back when, and that you recommended. I'm not sure that leather-bound agendas are necessarily, because companies don't have companies behind us anymore. If
Right.
you were writing a pre-approach letter today, would you narrow it down, or would you still make it pretty general, and how would you do it?
I would do it very general. Because let's face it, how many people get a letter in the mail along with all the political stuff, everything else that comes in, and they don't even open it, goes in the garbage. So you want something that's an attention grabber. Now, I've seen examples, and this is one thing I picked up in MDRT. There was one guy who had a technique and it worked. He said, I send out a pre-approach letter, which basically has 4 lines. It says, Dear Mr. So-and-so, I have a great idea I'd like to talk to you about. I'm going to call you on this and this day at this and this time. That's inconvenient. I'll call back. Signs it. Takes the letter and crumples it into a little ball. Puts it in the envelope, okay? And mails it out. Now, if you get a letter, an envelope with a ball in there, just out of curiosity, you're going to open it. And when you open it and you see this, most people laugh, okay? But he got a lot of appointments doing that because it was different. So, I don't know how many people today even remember the name Ben Feldman, but I'm sure you do. And I had one top of the table meeting where I was a speaker, and we're talking about a new product that we had introduced. This was through PPI. And Ben Feldman was sitting in the front row. And at the end of the meeting, he came over to me with Ron Barbaro, who was a good friend of his, and said, I don't understand a word you said. It's too complicated. Like, I'm a simple insurance salesman. Would you have breakfast with me tomorrow and explain it to me? I said, I'd love to, So, and he was the simplest person in the world in terms of the way he approached people and what he did. And he sold more life insurance than anybody in history, I think. And his approach, as we probably all know, is I'm selling dollars for pennies. And his approach to, and this was on cold calls, and he spoke about this the first time I saw him at top of the table meeting. And he said, I pick out the person I want to meet. And I do a lot of research about that person who could be the president of a large company. And I'm ready now to go and meet with them. So he said, I walk in, there's a receptionist. My name is Ben Feldman, New York Life. I'm here to see Mr. So-and-so. Do you have an appointment, sir? No, but you can tell him that I'm selling dollars for pennies. And he says, as a matter of fact, do you have a penny? And she says, yes. Okay, give me a penny, I'll give you $1. It's her $1. Now she gets on the intercom and she says, there's somebody here that wants to see you, and he's selling dollars for pennies. He says, I always get an interview. It's the simplest, easiest thing to do. But he knew, I've met other people who fly in with a helicopter, to make a big impression. And these were all speakers at the top of the table. And their method works too, but it's a lot more expensive to get to see a client that way. So there's all kinds of stuff, all kinds of ideas you can use.
I remember Ben used to sell money at a discount for future delivery.
Right.
Yeah. Morty, Stephen Epstein's asking whether you have a succession plan.
I do. I have, basically thought about this for a long time. And at one point over the last couple of years, I actually almost sold my book of business. But then looking at my book of business, I have over a period of time built up a really good book of renewal commissions, because most of my clientele are large contracts, 20, 30, 40, 50 million, 3 generations of families. They are all leverage contracts. They all have huge capital gains tax problems. That's why they have the insurance. They can't cancel them, because if they cancel them, they've got a huge tax problem. And they're also going to have a disposition problem in terms of, so they're in it for life. So I really maintain 100% persistence. And a lot of these people are a lot younger than I am. So there's a couple of them that are that don't know it. They think I'm their age, but I'm a lot older because I've never told them. I had one client who's a major Italian developer, and we were sitting with his sons in a boardroom, and his accountant, and he says, you know, more. He says, you and I are the same age. I said, that's right, 70. So his son knew how old I was, but because he knew my son, but never said a word. He was laughing. But the point is that this is going to keep coming in every year with fire service. I happen to have a staff in my office that have been in the business for over 40 years and that are terrific at servicing clients. And they know how to handle the service because every year there's a premium due. Somebody has to collect the money, get it to the insurance company, get a hold of the bank, get the bank to acknowledge it, get the banker together with the client, and give the client the loan that we structured all the way through. So there's a lot of service to do on an annual basis. And the renewals are very nice. And I felt that I'd like this to continue even after I'm gone. And I'm confident that the people that I have in there, so I've made a deal with these people whereby they will obviously be compensated for doing this. And at some point in time, which I'm going to leave with my wife, who by the way is also licensed and has her own sales corporation, specifically for this purpose, to decide when and where that happened. But in the meantime, there's a nice income stream that's going to come in. And the way businesses are valued today in terms of succession, it's usually 1.5 or 2 times earnings, which in my case really doesn't mean anything because of the nature of the business that I have. So that's my succession plan. I'm glad I didn't sell a few years ago.
It looks good on you.
Joe Dickstein and I used to talk about the fact that employees, my associate has stayed with me for a long time despite my personality. What would you say the key to having a long-term relationship with your support staff and your associates is?
Oh, I think it's a question of treating them the same way that you would want yourself treated. I mean, I've always treated anybody that worked for me in any capacity as an equal and respect. And that's what people want. That's what people like. I mean, obviously other things come into play as well, but I think those are the two most important things.
Thank you, Morty Sacks. This has been very informative. You have been a legend in the business for as long as I can remember. Most people are legends in their own mind. You've been a legend in all of our minds. I met you through Joe Dickstein, probably 1982 or 3, and I've known you throughout. You've always been consistent. You've always helped people and spoken with younger agents and helped to encourage people to become their best. You're a great mentor to us all. Very insightful questions. Thank you. Next week, we'll be joined by Don Forbes, who's a group insurance specialist, and Dave Patriarch will be interviewing him. The following week, Michael Lynx and Julian Wise will be back with him.
Michael,
And then the following week, Julian Wise will be back with Ross Durant, another legend.
I remember Ross too, sure.
The following week, which is November the 14th, I'll be interviewing Bill Bell, who is Barry's father. Week after that, Joel Kadeski. Week after that, Paul Williamson, another great in the business, and then Joe Sheehan to end up the year. We're ending the year with the strongest bench strength we can. Thank you, Morty Sacks. Thank you very much.
My pleasure. I'm really glad to do it. And if anybody needs any mentoring or advice, feel free to call me.
He's in the book.
That's the best offer you could get.
Yeah.
And thank you, Chris Tabarzo, for the technical support and emotional support. Take care. We'll see you all next week for the Meet the Masters of Insurance webinar series.